Hey everyone, how's it going on this Saturday morning with you? Go over this in this week. I kind of want to do a review of the past month or so. What's been going on. First, start out with just kind of how Apple generally trades. So I'm just using this monthly graph just as a visual only. And so Apple will hang out right here in this range for 3 months at a time, and then it will. I'll just use this recent example. It will break down, and then when it breaks down, you want to look for it to break up. And then the same thing will happen. This range will develop again. So after Apple breaks out, it'll, run to whatever point, and then all of a sudden it'll sit for 3 months. And it'll do the same thing, break down. Once it does that, look for it to break up, run, and then sit. And so that's typically what happens. So let's go to this frames page somewhere and to see kind of that in action. And so in mid-November, I put up this page, and let's go to a chart. Here's a 3-month chart broken out into days. Here's last October's earnings. And so Apple was flatlined here at that 400. So it was just kind of in that range for a while. And then all of a sudden it broke down. And that's when I put up this page. So it started to break through the put open interest. When it does that, it means something. It means there are no buyers in Apple, because this should always be able to kind of keep Apple in that range, because there should be sufficient enough buyers in there. Well, there isn't. So when it breaks down, there are no buyers. You have to just let it go. There really is no price target. What you want to look for is the put open interest to build up. So I'll go over that in a minute. So just let it keep breaking down, and that's what we have here. And then all of a sudden, you get this. Well, let's just say so. Bottom right here at this 365 area. And so at some week or a frame, you get a little equilibrium where it kind of stops breaking through that put open interest, and it kind of gets stuck in that range again. And that's what you had right here. And then all of a sudden, so the next week's comes, well, this put open interest stays up here because people are so scared and bearish, but the calls go away. They're not interested in buying calls. And that's when you get something that looks like this frame 4. And that's what we have over here on this JJO graph. The 380 built up, and that was our backstop. And there were, not very many calls. Whenever you get something like that, it's, going to be moving higher. And Apple is going to reverse course. And that's exactly what happened right here. All of a sudden, it got that 380 backstop, and higher it went. And now, going back to the frames, this isn't quite breaking through the highest open interest. It's going up to the highest call open interest, but it's not breaking through it. As you can see, kind of right here where it stops and has a little bit of snags because of the weekly options on it. Then all of a sudden you get this frame 5 here where it breaks through it. Once it does that, kind of the opposite thing. It means there are no sellers in Apple. They're not strong enough to do anything. Buyers are everywhere. And so the run higher in Apple. And then the process, after it has these big runs, the process will repeat all again. It'll stay stagnant, like I said, break down, break out, and that's how you can catch these big moves in Apple. So the put and call open interest, how the stock reacts on these things, the main point is it means something. If it can go higher, if it can break through that, at all times it should not be able to. When it can, it means something. It means there are no sellers left, and higher it will go, and the opposite's true there. Just in a broad market sense, you can if this lines up also, it's a good sign of the higher the probability is going to be of Apple moving higher with the market. Whenever you get this much puts, on the spider versus calls, it's hard for the market to go down because you have all this insurance. You have insurance backstops here, here, and here. And people have so much insurance bought on their positions there is no need to sell, because they're so protected. And so it's hard for the market to move down, obviously, like we've seen. So it just keeps moving higher. And so you can use that mixed up, with Apple. Kind of on the weekly spider here, as you can see, they kept it under 128. And so just on these little things, even if it helps you for 1 week, and say it only happens once a year, if something can help you understand why, though, like, oh, so here's the spider chart, and oh, the market's breaking down or it just can't push higher. Come look at this. There's Let's go ahead and pretty much throw out Friday because you had this in play. So let's see what Monday has in store. So a lot of this is just good to look at. If you find the market stalling, come take a look where the open interest is. If they line up, completely ignore it. Do not use that into your thinking whatsoever. That's really about it for this week. It should keep pushing higher. I mean, when you break out of the highest open interest, it's not really a 1 week thing. It'll keep going and going and going. So, okay, have a good week.